It's about that time of day again. My name is Joseph. Thursday evening, September 13th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a spike and range pattern tonight, and that tells me to look for short-term selling opportunities focused on buyer failures above the range tomorrow. The S&P is bullish with its own spike and range pattern, and the higher lows I'm seeing on the chart tonight are telling me I'm going to keep my eyes open for a breakout pullback, and I got my eyes on a key trend line to act as support tomorrow morning. Nasdaq is also bullish. It also has a spike and range on the chart tonight, and that tells me to wait for selling opportunities, or should I say buying opportunities, using seller failures below that range tomorrow. Gold is bearish. Got a spike in channel on gold tonight, and a strong move down on gold. So my plan is to sell into buyer failures up above those channel highs. And the euro is bullish, a strong run higher. So I'm looking for buying opportunities at support levels, but I've got my eyes on a key hidden channel on the euro for tomorrow. Boy, speaking of tomorrow, we're to wrap up this second week of the month. We got a Friday session, right? Wrapping up the week here tomorrow morning. Got some big moves on the chart tonight, bunch of ranges. We got a good plan here to set up. Before we jump in though and put the plan together for Friday's session, I got to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy. That's right, it's written out right here below the video tonight on the blog. If you scroll down below the blog, you'll notice all the text below that video, right? So make sure you grab that text if you want to read the entire text version of this strategy. Also, if you have any questions about anything covered in tonight's video, any comments, questions, concerns, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing, and don't forget to hit the bell icon so you get notified every time I post something new. And don't forget, if you want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. All I need is your name and your email address, and I'll shoot you an email every time I publish something new. If you're on social media, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, you can follow me on the lower left-hand corner. And don't forget, all the charts from tonight's video are available for download. Just follow that link right below the video tonight for those charts to download for tomorrow. And speaking of tomorrow, in the upper right-hand corner, what are you waiting for, right? Why haven't you taken me up on the free pass offer yet? If you're not a member here at School of Trade and you'd like to get a deeper dive into this strategy, if you'd like to see what what this strategy looks like on a real chart, right, as it's happening, don't forget to grab that free pass in the upper right-hand corner and join me in the trade room as a guest. And last but not least, don't forget, if you have any questions, you can always post them in the comment section below. Holler at me using the toll-free number on the homepage of our website, or you can always use live support on the right-hand side of the website. I'll be there to answer all your questions on live support. All right, hope you guys had a great week. It's been a great week in our trade room. Hope you guys have a great week as well. Getting ready to wrap up the week tomorrow morning. Tomorrow is September the 14th. It's Friday the 14th. Barely missed that unlucky number here by one day. So I'm feeling lucky about tomorrow, and we should. Fridays are usually a pretty good day, right, in the markets. Don't forget tomorrow morning, what do we got here tomorrow? We got retail sales at 8:30. We get industrial production at 9:15. So we got retail sales. So you got to be thinking Nasdaq tomorrow, right? I mean, Amazon being kind of the biggest retailer of all right now, and of course that being one of the biggest companies or biggest symbols on the Nasdaq. So you got to be thinking Nasdaq tomorrow morning. Maybe that Nasdaq will kind of bring the S&P along for the ride as well. So you're definitely thinking, right, Nasdaq, S&P tomorrow. Maybe a little bit of gold, a lot of electronics, they use the metals, and I'm reaching a little bit there, but definitely thinking gold there as well if you want to piggyback, every iPhone's got to have all those, all those metals in there, right? So I'd imagine the metal complex is going to be, right, it's going to be something to keep an eye on tomorrow morning as well. And then you get industrial production, right? That's manufacturing. That's another, right? That's another, manufacturing using a lot of the, copper, aluminum, right, gold components there. So I would imagine that will also, right, get that gold market moving for us as well tomorrow. So manufacturing and retail sales tomorrow. Manufacturing should have its tentacles in pretty much everything, but retail sales tomorrow, we definitely want to be thinking Nasdaq, right, and the Eminis tomorrow morning. Now, it's also important to remember that tomorrow is probably going to be rollover, right? We are watching all of the volume here. We didn't get rollover today. I warned you guys about this last night, and kind of as I'm recording this fresh out the gate in Europe or in Asia, it looks like Euro is leaning towards rollover. It looks like the S&P hasn't quite done it yet, and it looks like the Nasdaq is not there either. So, I honestly thought we'd be trading the 12-18 contracts today, but as you can see, you really can't trust until the volume rolls over. So tomorrow morning, be watching that volume, and really we're looking at the Nasdaq 12-18, the S&P 12-18, and the Euro 12-18, right? The 6E, and again, it's very, very simple. Once the volume on the 12-18 is greater than the 9-18, make the move, right? Don't wait for anybody else to give you approval, right? Your broker doesn't need to give you approval. There's no way you can mess this up. Just trade the market, trade the contract month that has, right, the most amount of volume on it. And then so in addition to that too, I also want to remind you guys too here, end of the week, right? So we're thinking early in, right? Early in, early out tomorrow, right? Early in, early out. I always tell us in the trade room on Fridays, we're thinking 11 o'clock Eastern time is going to probably be our cutoff tomorrow, if not a little bit earlier. On Friday morning, though, after 10:30, I always try to keep my finger on the pulse of the market. I try to keep aware of the time after 10:30 because I don't want to get caught, right, trading too late on a Friday morning. Fridays are early in, early out scenarios. Again, we got rollover watching for tomorrow. And with those big news reports tomorrow, retail sales being a big number, industrial production being a big number, we should have a couple, proverbial shot in the arms tomorrow, right, that should get us moving pretty well to finish up the week and export. And obviously, we're expecting to have a pretty good day tomorrow in the markets as well. Let's jump into our charts here tonight. Get this ready for Friday's session. I've got crude oil, S&P, Nasdaq, gold, and euro on the docket here for this evening. Starting off tonight with the black gold, the Texas T, right, the crude oil futures. Crude is bearish with a spike in range, a measured move, and a possible spike in channel on the chart this evening. The spike in range, this little guy right here, right, spike into a range. You know the drill, right? If you've watched this newsletter religiously every evening, anytime we see a double bottom in a bear market, we know it's going to be a range, right? So, of course, strong move down, right, into that trading range. What does a spike in range tell me? In this case, it's a bear market into a range. So we know sellers have control. And also, I should sell, right, up high, right? We should sell high because it's very obvious here the bears are not interested in selling low, or else it would have looked like this, right? This is what happens when the bears are interested in selling low. When the bears are not interested in selling low, what happens is they take their profit and the market bounces. So once I see that, now I know, okay, we're not trying to sell low. We're trying to get up so we can sell it back down again. That's what that spike in range, right, tells me. Now, if price does push lower, right, if we do see it push lower here, I'm watching this little hidden channel, right? So if we do end up pushing lower, I'm going to try to use that, right, use that channel, use the underbelly there, right, as resistance. So we kind of have that hidden channel coming down. But you got to be careful down here, though, right? Got to be careful. We have 1, 2, 3 legs, right? So a measured move, a triple measured move, then at 67.77. And then it would also be advisable here, if you look left, yeah, we're back to where we came from, right, at the end of last week, right? We got those support levels down here too. So the reality is that if we do go lower, right, we've got some support levels here that we're going to have to trade around. And whenever we run into a situation where we kind of run lower here, right? We don't want to sell into that support. I know the strategy then becomes traps, right? Two-legged pullbacks, right? And traps, get up, up around resistance. That way we're not selling, right, into that level of support, right? So as we go lower. So, basically there are three scenarios. Well, I guess four scenarios. Right? What if we keep going sideways here, right? What if we keep going sideways here tomorrow? If we keep going sideways, I'm just going to wait here to sell the market as we go higher. Now, assume now the price pops higher here, right? When it pops higher, what's going to happen is we're going to see that moving average coming over. Let's just draw this up, right? Let's say we pop higher here. Right, I want the price to rise higher because A, I want to sell high because we're seeing rejection down here at the lows, and B, I want to give myself a little bit of an edge by getting those buyers, those counter trend buyers trapped on the wrong side of this market. So imagine now we jump higher. Right? We jump higher, all the buyers now come out. What do? Right? They try to buy this pullback. As they try to buy that pullback, we now know exactly where the pain starts for those buyers, right? I always tell my clients, imagine that you're the buyer here. At what point would you start to feel pain? At what point would you start to worry and say, I think I might be in the wrong side of this market? For me, it'd be right about there. Right when I start getting down around that low, that's where the pain starts, right? That's where most buyers will have their stop losses. That's where most buyers will say, okay, uncle, I'm done, right? And they'll give up on it. How do buyers get trades? How would a buyer wave the white flag, right? Become a seller, get out of their positions. So that's an easy, and we call this a buyer failure pattern, but really what it is, it's a bull spike up, little bull push up. Buyers try to buy the pullback. We know where their stops are, and we're looking to sell into those stops, right? It's called a buyer failure or a two-try failure because it's a range. Now, as we're going lower here now, and again, that'll be the first opportunity there. As we're going lower here now, again, we got to be careful down here because we don't want to sell into that low. So what's the best way to do this? The best way to do this is to get the moving average through, get that strong move through the low. Got to be real strong going through that low. Then look for that two-legged pullback. And again, you're going to want to see a two-legged pullback here, mostly because of this support level down here, that measured move, right? You're not going to want to just sell it as it goes lower because a lot of sellers are going to be weary of selling too low there. So I'm looking at the two-try above, right? And then, of course, the right kind of breakout pullback pattern to the downside. So you may, these patterns might be brand new to you right now. And I've got a great free trading class. I'll link it up in the upper right-hand corner here. If you want to learn more about these patterns, you want to see hundreds of examples of these patterns, grab that free course. It's in the upper right-hand corner. It'll be worth every second of your valuable time. It's priced at $free.99. So what could go bad with that? And again, I'll teach you more about these entry patterns that I'm going to be talking about tonight on the newsletter. Now, again, if we keep going sideways here, right? We keep going sideways here, then we got to be patient, right? It'll be either be the up, one try, two try, back down. Again, you're thinking buy breakout, you're selling into those failures, or we go lower, break down, get that moving average through, and then again, because of that support down here, we can't be too aggressive, right? Traps, use those levels of resistance, sell at resistance as we go lower. Now, there's been a lot of reversals here this week. It's been a really crazy week as far as reversals go. What would a reversal look like? Well, I have kind of a little pattern I call the 1, 2, 3 reversal, right? And as we always kind of joke around every evening, right? There's an exclamation at the end of that statement, and the reason why there's an exclamation on that is because there needs to be a strong, right, 1, 2, 3 reversal. And basically what it means is I'm looking for a strong move against the trend. Then I want to see that moving average come up. I'm looking for the buyers now to buy the pullback and strength. That 1, 2, 3 strength. That's the key to that 1, 2, 3 reversal. Now, if we do get that 1, 2, 3 reversal, that strong move higher, then we go out and look for the entry. What I'll do is I'm not going to chase after it. You don't want to chase after it. And what I'll do is I'll draw a couple trend lines here. I'll draw a trend line off of those lows. I'll draw a trend line off of that high, create a channel, and this is really where the sweet spot is. It's the low of that channel, right? Between the low of that new channel and that rising support trend line. And what I'll do is I'll look for that pullback and look for the buy using those support levels. Okay, so memorize that pattern. When you get a market that reverses, that's always going to be a great, reliable pattern. And then, of course, a target overhead. Yeah, a target is all the way at that point. The buyers take this back. It'll be all the way up there at 71.26 if the bulls can get it. Bears, they're trying to finish off that move back down to those lows at 67 from last week. Buyers, they got to get control first, and then we'll go up to retest that high at 71.26. And again, I know I'm covering a lot right now. I got to keep moving through these charts, so I can't go that deep into each topic. But if you want a much deeper dive, grab that free trading course. Right, in the description, I'll link it up as well, and you'll be happy you did because you'll be able to really get the most out of this time together on our newsletter. Let's keep going here. How about some S&P here tonight? We have a series now of the S&P and the Nasdaq. They're both very similar, so really the S&P and the Nasdaq are almost going to be identical plans for tomorrow. So I apologize for the redundancy here, but that's just the way the markets are looking here tonight. Again, this is the 918 contract. You do want to keep your eyes open tomorrow morning, 8 o'clock Eastern time. If we come in tomorrow, 8 o'clock Eastern time, and we're seeing that 1218 is more volume than the 918, you can see right now, right, that the volume is just a little bit higher on the 918 contract, which is surprising because the way it finished up today, you would have thought, right, we'd be rolling over here for tomorrow. So right now, we're not quite there yet. It looks like the euro is, which we'll grab in a moment, but for now, on the S&P is bullish, spike in range, support trend line, and measured move on the chart this evening. Spike in range tells me, right, spike, double top. This is almost identical, but just the opposite we saw in oil. Anytime we have a bull market and we double top, we know it's a range. Okay, now this one looks like it could be a larger range like that. So I've accounted for that, but you'll notice the rotation here. This confirms the smaller range. So the actual range is right here. Okay, I take that range, I copy and paste that and bring it down. I could also copy and paste it and move it higher as well. Not as necessary, though, above those highs. But this area now down here becomes a key level of support for that spike in range. What does a spike in range tell me? Spike in range tells me the bulls have momentum at their backs, and I should focus on buying at support. Right? Buying at support. Again, if these bulls really wanted this thing, right, they'd be buying high right now, but they're not buying high. They're rejecting the idea of buying high. And what does that tell me? It tells me I should focus on buying low, or I need to wait for a strong break higher, right? And if we do get that strong break higher, by the way, how strong does it have to be? I want that moving average up above the top of that range. So get me above, make that moving average 29.06 and a quarter, and all of a sudden I'm content with that breakout, right? You'll see lots of times where the market will break out, pull back, and all it does is kind of fiddle around here and collapse back down. I don't want that to happen. Now, keep your eyes, though, on this support trend line, because this is going to be our big key here, right? Nice big breakout. My goal will be to find a way to incorporate that trend line with that moving average on the pullback. Now, sometimes, right, sometimes they really bust higher. If this thing really cranks, if it just busts higher like this, if this thing just says, see ya, and just runs higher, right, a lot like what happened this morning. Not likely, but hey, it is definitely possible on a Friday morning. If that's the case, then again, right, I'm going to draw a trend line off of that low. I'm going to draw a trend line off that high, find that new channel. You got it, right? There's our sweet spot right in there to buy that, right, to buy that pullback. So if it does just launch, okay, we'll get a little bit more aggressive on that. So strong move up into a spike in range. I've got really, three options tomorrow. Option one, we pull back, right? And you're looking at ultimately this pattern on the pullback. You get your one try, your pullback to the moving average. Your second try, your failure, right? And literally, that is a carbon copy of what you're trying to accomplish here, right, tomorrow at these lows. One try, pull back to the moving average. Second try, and then I'm looking for that run higher. One try, two try. We call this the two-try rule. One try, two try. All right. As a client of mine, we'll talk about different ways to use, for example, one try, two try with a higher low, right, as opposed to one try, two try with a lower low. Those are really important clues, right? They're very important clues. They both have good and bad about them, and you have to know really how to tune in and trade them correctly because not every two try is created equal. So that's the goal, build that low. One try, two try, back up. And again, we'll watch how the lower lows or higher lows work, right, on that one try, two try tomorrow. And then don't forget also too, right, as we go higher here, like I mentioned earlier, breakout, pull back, or just busting higher here, find that new channel and buying that pullback from there. As we go higher here, we got a lot of good targets up here. 29.18 area. Yeah. Wait for it. There's the, what is that? Back from end of August, right? So pretty much prior month highs up there at that, right? 29.18 area, right? Give or take. Keep in mind, these numbers might be a little bit different if you're rolling over tomorrow, right? The chart will look pretty similar, but the numbers themselves will be a little bit, right? Be a little bit different. You can see right now the current price in the 12.18s at 9 3/4, with the 9.18s at 04 3/4. So you'll notice those will be a little bit different than the two charts. And then what else can we worry about here today? What if it goes sideways? If we sit going sideways tomorrow, you're going to sit on your hands, right, and wait for it to basically give us one of these setups. One try, two try, back up, right, or sit on hands, break out, pull back, and go, right? So we're kind of waiting if it goes sideways here. And then again, it's been the week of reversals here this week. How do we reverse? What does reversal look like? Reversal looks like the 1, 2, 3 reversal, right? Now see how they went lower here, but they couldn't run it lower after that? That's what's missing on the 1, 2, 3 reversal. 1, 2, 3, 1, 2, 3, right? Very simple pattern here. The hard part about this pattern is staying patient for it, right? Because you really can't sell that pullback, okay? Because if it was as simple as getting a strong move down, well, why didn't that pullback, right? Why didn't that pullback work? You know, that's the problem. You don't want to sell that pullback. You want to wait for that pullback to hold, then find that new channel, right? Find the new channel, and then we look to sell off the top of that channel. Okay, where's my target as we go lower? Target as we go lower is down to that 84 3/4, right? There are a couple more down here as well. We got this, what is this, 28.80 area as well. So we'll work on that tomorrow, right? Once we do get a reversal, no need to freak out about it yet. But right now, buyers trying to get that 29.18, sellers trying to go back to 28.84. Right? Which way do we go? Will we roll over tomorrow? Nobody knows. We'll wait and see if the volume rolls over for us before 8 o'clock Eastern time tomorrow morning. How about some Nasdaq? Nasdaq, very similar to the S&P. We're bullish, spike in range, support trend line, measured move on the chart this evening. Spike in range, of course, is bullish, right? Strong move up, double top at that high. That tells me there's a range. Find that, right? Find that range and buy that dip. Or break out, pull back, and go, right? Pretty similar pattern here, right? Spike in range tells me bulls have control, but they're hesitating to buy the highs, giving me reason to wait for buying opportunities below the range, right? Or waiting for a successful breakout pullback to new highs. And if the bulls continue, anytime we see a strong move in one direction, we're looking for that measured move. That measured move is waiting up top here at that 76, right, 42.5 area, which, as you can see, isn't quite back to retest those highs, right? Those major nosebleed seats up there at 7,700. But hey, this could be a good rally here going into the third week of the month if it starts off with another leg going higher tomorrow. So relatively easy strategy here on the Nasdaq. It is almost a carbon copy of the strategy here on the S&P. So we look for, first of all, that two-try rule. Now, here's a good example, right? Here's a good example of another version of a two-try rule. This one's a little bit sneakier, right? What you're looking for here is, again, we pull back, we see bears coming in at the moving average, we know where their stops are, and we're now able to buy into those stops. Okay, very simple pattern. Looking for that now as we go lower. One try, pull back to the moving average. Two tries. Again, there's a big, right? There's a lot of context here. If we go higher low, or if we go lower low, right? Those are very different patterns. The personality of those is very different, and we use different tools, right, to trigger the entry with those as well. So two-try rules. Again, if you want to see a lot more examples of these two-try rules, you can grab that free trading course in the upper right-hand corner. Grab the free class linked up in the description as well. So one try, two try, going back up into that range. Got my rising support trend line. This rising support trend line doesn't look as realistic as it did on the S&P. The S&P's was a little bit strict, a little bit steeper, so that was a little bit more realistic. I would imagine this trend line tomorrow is probably going to only be in play here if we really kind of wind up and then bam, blast out from there. Remember, the key though is you want to get that moving average up above as well, right? You don't want to try buying those breakouts unless you can get enough strength above those highs. So keep that in mind here for tomorrow. And again, if this thing just launches, right? If it just launches higher, there'll be a couple options here. We can find a new hidden channel here. That will be something to keep our eyes on tomorrow for a pullback there. Probably going to be more like this though. If we do see it just run higher, right? We're looking for that new spiking channel there, looking to buy those pullbacks as we go higher here up to that measured move 76.42.5. Again, if it goes sideways, you sit on hands waiting patiently. One try, two try, back up in. If it sits sideways, right, breakout, pull back at that moving average up. Okay, these are all relatively simple patterns. We've talked about them quite a bit so far this week. How would the market reverse? How would it reverse? 1, 2, 3 reversal. 1, 2, 3 reversal. 1, 2, 3. Again, got to hold that moving average, right? Got to hold that moving average. Again, if it was as simple as a strong move down, then this market would have been bearish, right? It's not as simple as a strong move down. A strong move down could easily just be, once we get back to that moving average, it could easily be this failure right up to retest those highs again. So we'll keep an eye on that tomorrow. If we do get that strength off of those, right, that pullback, find that new channel, draw the trend line across the high, right, and then you got your sweet spot there, right? We look for that sell back off of that high. And again, if you want to see lots of examples of the patterns we'll use for these entries, grab that free trading course. It's linked up in the description, right, as we said earlier on the video. So relatively simple plan on the Nasdaq. I don't want to take too much time on the Nasdaq because it's pretty much the same plan as the S&P. Let's go to something new here. How about the gold here? The yellow metal is bearish with a spiking channel, a round number, yeah, there's that round number again, and measured move on the chart this evening. The spiking channel is the most important clue. That tells me the sellers have firm control, but the lack of any real pullbacks, you'll notice there really haven't been. That's a big, strong move down. So there's no real big pullback here yet, right? I mean, heck, they haven't even hit like a 382, I don't think yet, right? So there's been very little pullback there. That didn't even hit a 382. That is a 382. So we're due, right? And now I don't use Fibonacci very much, but it is good. The way that I look at it is that when we see a strong move down like this, all the sellers are waiting for that 382, that halfway pullback. That's where a lot of conservative traders are waiting. Well, they're still waiting. Their bags are packed, their tickets in hand, the bus hasn't shown up. Okay, so the sellers have firm control, but the lack of any real pullbacks has left most of the sellers most likely on the sidelines. So the next pullback we see will likely be a selling opportunity. Now, it's also important, number two, on a spike in channel, when I see a spike down into a channel, you can always tell a spike in channel because it starts off with a spike, obviously, and the channel's obviously is almost always really condensed. It's like this real small, narrow channel. What you want to think about, though, is those initial few swings up here, right? That first pullback, the base, if I draw this channel again here, there. The base of that channel right there, right, and that one right there. Those are the two swings, Okay, and the way I drew it up earlier, that might line up with a 382 or a 50%, pullback level there. 50% isn't a fib number, but 382 definitely is. And so those levels will be important to keep an eye on. We want to go up again. The sellers are waiting up there, and we can use that little pullback here, usually again to confuse the buyers, right? The buyers will think, oh, look at that, we're bullish, right? They'll try to buy. We know momentum is not bullish. We look to sell. We find that new push lower, new channel, right, and finish off that move. That is a two-try buyer failure into a hidden channel, right, bear breakout pullback. Again, I've got literally hundreds of examples of those patterns on real charts. They're linked up in the description of this video, or if you're on my blog right now, grab that information icon in the upper right-hand corner. Okay, now we do oftentimes also see spike in channels, right, run lower. You'll be amazed how many times you'll see a spike in channel. It's like just piling on, right, into a spike in channel. Right? It happens all the time. It's kind of surprising how often this happens, right? You wouldn't think you'd see that many situations like this. It's like a wedge into a wedge into a wedge. It's like a unicorn, right? You wouldn't think you would see it very often, but we do see that very often. That momentum. So if we do see it run lower, watch for another one, and oftentimes it'll use the underbelly of that channel, the original channel, and same plan. Right, same plan. As we go lower, get a round number at 1200. Remember we talked about this. The round number is that kind of warm, fuzzy, security blanket for traders on gold. It's not a safe haven, but it's just kind of a well-known number people have been using here for a long time. And of course, the measured move right off of that high. Now, those are targets down bottom. If we pull back higher here, though, which we really should, then this becomes now the measured move. So basically, if we pull back above that high at 1210, if we break through 1210, then we've got to readjust that. Let's just kind of eyeball it here. If we go lower like this, bring that, let's just say we go all the way up to like 1211, 1212, right? So that would be, if we were to pull all the way back up here and then fail back down, that would be the measured move. So it's not going to be that much different, but it's important because it's major support, and that basically tells us when to stop selling, right? Those measured moves, when to stop selling. So what's the plan here? What if price goes up? Price goes up, we're looking for buyer failure. We'll be above the moving average. Okay, first option here will be a trap high. These traps are usually kind of dangerous because these moves on spiking channels can be pretty strong. So it'll be a trap pattern first, but usually the bread and butter is going to be that failure. Right, get that failure off the moving average. We'll then look for that sell back down. I don't like to chase after those moves going lower, so I'll find a new channel. Draw that trend line overhead. There's your sweet spot right there between those two trend lines. Right, sell back down from there. So again, this is a two-try failure, right? Two-try failure into a bear breakout pullback. Really simple pattern. Again, you're waiting for the pop up, wait for those buyers to try to buy the pullback, and just let them fail. Right, look for that signal as they fail. And again, we'll go over the signals right in our trade room that we know how we're actually going to take these patterns. Right, obviously I'm just drawing these up right now, but we'll talk more about the actual signals in the trade room. And then if we go lower. Right, if we go lower, usually the calling card of price going lower is it will hold the underbelly of that channel. So if we see them hold the underbelly of that channel, so you don't want to worry about this because this happens all the time, where it kind of pokes its head through and then comes back up, right? If we poke our head through and comes back up, then we got overshoot, same thing, failure, back down again. But if we can run through and actually hold that pullback to the low of that channel, okay, you use that channel low, then we have our new spiking channel, right? Then we got our new channel. And now we're looking for sell off the high, up, failure, back down. Again, trap patterns above these highs, traps, buyer failures, and then selling back down. Remember too, as you get closer to these major support levels, okay, that measured move is also right above that major swing. If it really starts getting nasty here tomorrow, we got even more levels waiting down there at 1193, right? That 93 area. Again, going back to, what was that, Wednesday's or Tuesday's low, right, on the 11th. So that takes care of the gold to the downside. We know what we're looking for to the downside. What does a bullish reversal look like? You guys are experts on this now, right? 1, 2, you got it. 3, 1, 2, 3, you got it. Jumping up. Find that new channel. Buy the low of that channel. And again, don't forget, we got that, you're drawing off that trend line. That's your sweet spot right there, right? Use those levels of support to buy that pullback. The target for the bulls is pretty easy, right? 12.18 is pretty much the carrot at the end of the stick there for the gold bulls here tomorrow. Gold is not worried about rollover. This is the 12.18 contract on gold, so we're good here until mid-December on gold. And then over on the euro, it does look like, out of all the markets tonight, it does look like, okay, so now the Nasdaq is higher, S&P isn't yet, but it looks like the Nasdaq's going to be rolling over tomorrow, and it does look like the euro is almost a given here to be on the 12.18 contract. So again, the chart patterns will be the same, but the actual price numbers will be a little bit different here. And this is, again, very, very similar here. We have a bullish strong run higher, a spike in range, a hidden channel, and a reversal line on that chart this evening. The strong run higher tells us, what does that strong run higher tell us? It tells us really any pullback is probably going to be seen as a buying opportunity, right? So I want to buy at support. The momentum of the market is bullish. The lack of follow through, right? This lack of follow through right now really puts, in my eyes, a big question mark, right? It's a big question mark right now. Right now, what I do know is it's bullish. It looks like a range. But, in all reality, like I said earlier, if we do push higher here, this could turn into a spike in channel like we have on gold. So it could keep pushing higher here. Right now, we really don't have enough information to really know the story on that. So we're definitely bullish. The lack of follow through says, is this a range? Is this a spike in channel? A little bit tough to tell. We'll put the plan together on both of those as well. And then what we didn't have on gold, which I like about this euro here, is we got that new higher high, lines up beautifully off those lows, and that will give me now, right? That will give me now a level of support down here. That's a great level of support. Also, strong move up, got a measured move waiting up here. Bingo, 17.6 and change. So measured move is the big target here for tomorrow. So let's play both scenarios here. If we see strong move up, pull back, double top. Okay, so now we know double top of the high. Okay, now we know this is a range. What's my plan? My plan is, you guessed it, you got it. 1 try, 2 try, back up in. Right? 1 try, 2 try, back up in. And again, you're looking for that hidden channel low. Nice support levels there. We got support levels here. When the market's bullish, just find a level of support, wait for price to pull back to it, and find an entry pattern. I'll teach you how to define the trend. I'll teach you how to find those levels of support and resistance, and I'll definitely teach you the most reliable entry patterns, and we'll trade them every day together in our trade room at 8 o'clock Eastern time. What if we go higher here, right? We go, no, man, we're not stopping now. We're going higher, right? We're going higher. Okay, whatever Draghi said today, apparently, right? People enjoy. What do? Find that new channel. You guessed it. Now that becomes a spiking channel. Okay, at this point now, we got time to buy the low of the channel, okay, or buy the low of that channel, deep pullback, because again, spiking channel patterns usually give us deep pullbacks, and we'll look to buy going higher from there. So really, it all comes down right now to what happens next. Do we go up and pull back? Turns into a range. 1 try, 2 try, back up we go. Do we run higher? Right? Do we run higher? If that's the case, find that new channel, right? And we're looking to buy that pullback. Now, what if it really jumps? Okay, got a big potential measure move here. What if it really jumps here? What if we just run and blitz? Okay, blitz is higher, you can be more aggressive. Right? New channel there. Highs there. Right, support there. Buying that pullback. And again, a lot of times when a market really jumps, what will happen is is it will kind of sneak below the moving average. You'll see that little 1 try, 2 try, right? We use the term sticky, right? The term sticky in the trade room. If you're a client of mine, you know what we're talking about, right? It kind of sticks to that moving average, just like this one, right? So, see this one, running higher. It pulls back. It can barely get away from that moving average and blasts higher. Beautiful example of a 2-try failure, right? Late in the session here on the euro. So if we do jump higher here, don't chase after it. Look for that little sticky 2-try pullback, right? Catch those bears on the wrong side of the market. What if we keep going sideways here? What if we keep going sideways? Just stay patient. 1 try, 2 try, back up we go. Or if we keep going sideways, you guessed it, right? Strong breakout, pull back. Use that high. Beautiful. Okay, that'll be our goal for tomorrow. What does a reversal look like? I'm glad you asked. 1, 2, 3 reversal, right? 1, 2, 3. Okay, typically if there's a channel on the chart, they're going to use the underbelly of that channel as resistance. We'll see if we get that tomorrow or not, right? But 1, 2, 3, strong move down. Find that new channel. Remember, that needs to pull back to the moving average. Call it a 1, 2, 3. Draw that trend line off the highs, right? That's your sweet spot. And we're looking for, again, I want to reemphasize again, though, it's got to go strength, pull back to the moving average, right? And then strength move through. Then we find that new channel. We draw that trend line. There's your sweet spot, right? And we're looking to sell as we go back down. All right, guys, don't forget, every morning, 8 o'clock Eastern time in the trade room, we'll trade this strategy together. And I've covered a lot of information, dropped a lot of knowledge in this video tonight. If you want a deeper dive, if you want to see hundreds of examples of these patterns, right, the actual entry patterns, everything we use, grab that free course. It's linked up in the description and, of course, in the upper right-hand corner in the information icon. Don't forget, we get the best free trial in the business. If you want to come out and join me as a guest in the trade room, grab that free trial on the homepage here at School of Trade. If you're brand new to day trading and you don't want to waste a lot of time and money, the best investment in your time is that beginner class here at School of Trade. If you're an experienced trader, right, and you're sick and tired of crummy trade rooms and lackluster strategies, and you're looking for someone to help you keep on track, stay motivated, stay held accountable, follow those rules, and a great community of traders, our advanced class is for you. And please don't forget, I've got live support on the right-hand side of the website. Pardon my ugly mug. I've got a toll-free number, and I'll be around all weekend if you guys have any questions. As always, great job this week. Really proud of you guys putting in the effort this week, putting in the reps. Is going to pay off here for us tomorrow. I will plan on seeing you guys next Monday for our next edition of our nightly newsletter. I don't do these on Friday afternoons. If I don't see you guys in the trade room, we'll see you guys on Monday afternoon. My name is Joseph. Be well out there. Be nice to each other, will you? Have a great weekend. I'll see you next time. Adios, amigos.